Is inflation a quiet form of theft? Are gold prices actually going up? Or is it really broadcasting the dollar's weakness? If so, what can we do about it? How can investments in scarce assets like gold and silver or decentralized assets like Bitcoin be used to counterbalance this constant erosion of our savings and purchasing power? When weighing the cost of living, inflation, fluctuating interest rates, and the ever-growing national debt, it becomes more and more challenging to know if you are meeting your retirement goals. If you think you may be falling behind, see the link in the video description to access the free Inflation Retirement Calculator to make sure that you are on track. To discuss why gold works, why fiat currencies ultimately fail, and why gold and other scarce assets act as an insurance policy against risk, we will hear from economist, White House advisor, and author Jim Rickards, former congressman and activist Mark Finchem, and economist and investor Keith Weiner.
The value density of gold is definitely a factor. Karl Menger, the Austrian school, defines it as the most marketable commodity. I'm a big fan of kind of reducing things to something that's perceptually obvious. We're physical beings that live in a physical world. There's a time when you need to be able to take your marbles home. But that means taking home a physical good. You're a physical creature, you live in a physical home. You need to take something home and say, I'm done. I've gotten final delivery, final payment. This is it. I'm holding it. 1 ounce of gold is a pretty big chunk of money. You could buy, maybe not a decent used car, but you could buy a used car with 1 ounce of gold. You could buy, quite a year's worth of groceries, but certainly several months worth of groceries. And it's always been like that. The key for me is that you have the right to redeem for your gold if you want it.
You're not purchasing money. It's an exchange. This is not a purchase. This is an exchange of one type of currency for another. U.S. Mint controls not only the coin that has been coined, but also the Federal Reserve notes that flow through the system. So at the time that you trade Federal Reserve notes for something that is of the U.S. government, which is maybe a gold coin, this is not a purchase. This is an exchange of one type of currency for another.
Gold is a chameleon. We all know if you put a chameleon on a green leaf, it looks green. You put it on a brown tree trunk, it looks brown. Gold sometimes trades like a commodity, sometimes trades like an investment. It competes with stocks and bonds for investor portfolios, and sometimes it acts like money. Now, I think of it as money. I think that's the right way to think about it. But look, it trades on commodity exchanges, and I'm impressed that gold has done as well as it has in a positive real rate environment. The Fed will not rest until they get the inflation they want. So I think we have to take that as a given. Governments cannot tolerate deflation. It is their worst nightmare. Destroys tax collections, increases real debt to GDP because the real value of debt goes up. Well, gold as money is the gold versus the fiat trade, but just to turn to the insurance aspect of it for a second, I recommend about 10% of your investable assets. Don't count your home equity in your business. That's your shelter and your livelihood. Put that to one side. Everything else is your investable assets. For an institution, it's just whatever your portfolio is. I recommend 10%. By the way, the average institutional portfolio is about 1.5% gold, and that's not evenly distributed. Most portfolios have 0, and then there's like Kyle Bass and University of Texas. I think he's above average, but it's about 1.5%. If institutions just went from 1.5% to 3 or 4%, forget 10%. I mean, there's not enough gold in the world or near these prices to fill that demand. So it wouldn't take much of an interest by institutions in gold to send the price skyrocketing. That's just normal supply and demand. That's an insurance component. So do you have fire insurance on your house? Of course you do. Do you want your house to burn down? Of course not, heaven forbid. But if it does burn down, you're really glad you got the insurance. And when you write a check to the insurance company to pay for your fire insurance, do you think you're wasting your money? No. So that's one thing that gold can do in a portfolio.
1933, we went from you could hand in your $20 bill and get 1 ounce of gold to no longer is it possible to redeem that paper. Now the paper becomes irredeemable, meaning it's a promise to pay that is dishonored and promises not to pay. So it becomes a contradiction and then a meaningless unit. I mean, what is the dollar worth? Go to your local McDonald's today and find out what they think it's worth. And what will they think it's worth tomorrow might be a different worth than it is today.
And really, this is the collision, again, of two ideologies. One that the government owns the money and the other that the people do. Exchange, that's where the whole exchange versus buy thing, we exchange one for another. Now, the fact that this is now worth on the open market, anywhere from 20 to 30 bucks depending upon condition. At the end of the day, I exchanged this for a $20 bill with somebody else. Anything that goes above that, if it's worth $35 today, this didn't gain value. It's still worth $20 to me. What happened is there's $15 in inflation that happened since the time I acquired this, and I should not be taxed on that. Retirement is not a Republican or Democratic issue. That's an every person issue. And if we're not protecting what people are investing in today, whether they are exchanging dollars for gold or exchanging dollars for something else, a house, those things, when people go to retire, if we don't have the right monetary policy in place, the government's taking their retirement.
Gold holds a proven, time-tested track record as an economic constant that spans millennia. Why is it important to have an economic constant? What is the main question every person planning their retirement or building a business needs to ask themselves? Are we growing wealth or losing wealth? And how do we measure this? Gold is that tool. Gold is clearly on the rise and making historic highs, with a 5,000-year record that has withstood every economic business cycle, stock market booms and busts, global conflicts, and outlasting every faith-based fiat currency. Gold is no one's liability. It builds wealth while preserving it. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, transparency, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring all these investing principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the link in the video description to access the free gold investment guides. If you enjoyed this video content, be sure to like and subscribe so you don't miss our next video. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.